Welcome to my channel, everyone, and in this video we're going to talk about supply and demand zones 101 and how to properly use supply and demand imbalances in your trading. Now we're going to review some trades from today and yesterday along with some market context and the commentary that I provide in my Discord room for members. That way you all could get in my head and understand my thought process behind each setup. All I could ask before we do begin, if you do enjoy my content that I put out, you'll learn something from my videos. If you could just smash that like button down below, it'll help me out and it'll help the YouTube algorithm out. And without further ado, let's get right into the video. Every morning I post a pre-market plan on my top setups. And as always, I always have a plan for the S&P 500 as it's the market, and the majority of the equities that we trade will mimic or follow the overall market itself. So the plan on the S&P was we were in a very tight range, as you could see from this gray line. If I maximize this box, we were consolidating, and what this states is a balanced market. And you all know, if you've been following me, there's two types of markets. The market could be either balanced, where market participants are agreeing on price between buyers and sellers, or an imbalanced market where the participants are more on one side of the market, hence a very strong move up or a very strong move down. So yes, we have micro, small little imbalances in here. That's where we get our supply and demand zones from. But the overall bigger picture was we were consolidating in a very tight range. So we had to break out of this range or else we were going to continue to be balanced. So we had supply at the 3802.5 mark. And if we're below that, sellers are in control. And we had demand at 3791. And above that, buyers are in control. And whatever direction we move in is the zone that's probably going to be the strongest. So we had an opening up inside of these two zones. So when the market first opened, we were below VWAP consolidating, but we're selling off into demand. And when we're in demand, you want to see any type of life for buyers. So if you know what a demand imbalance is, it's essentially an area on a chart where there are unfilled buy orders, or even an area on a chart which market participants, smart money, big money considers fair value, where they want to enter their position with the market going against wherever the market is majority. If it's short, they want to be long. If it's long, they want to be short. So everyone today was selling off. I know a lot of people were very bearish on this, but we had demand. Now, we sold off into demand. As you can see, we had very strong buying pressure. And this is something that I put in the intraday commentary room. I also mentioned it on my Instagram story. So if you aren't following my Instagram, I posted this on my story. Pretty aggressive buyers at the 3784 area on ES. So what I saw here was, if you look at the price, we were above the asking price, and we had 200 S&P 500 contracts, which is a pretty aggressive order. You know, it's not a small order. This is a couple of $1 million right here. So that was just shown with watching the tape, watching the time and sales, no fancy indicators, nothing like that. Like I said, that was on my Instagram story. And really fast, if you aren't following it, I'm going to link this in the description below. Pause the video, go follow it. It's a very good trading resource. But came down and I saw very aggressive buyers inside of demand. So right there is your proper confirmation as the market came up. And every time, if you were watching the candles develop, the market tried coming back down, but buyers were defending the moves down. So those buyers we saw at 3784, when price came down to 3787, defended that pop, very strong buying pressure, and then the market continued to rally. So a lot of people don't understand the bigger picture, and we are still inside of this tight range. We came up and the market moved very high. We attempted to move higher, and right here was the first sign that buyers were not very interested as we came up and we had a very strong wick. If you were watching price, we immediately got rejected from the 3001 area, 3801 area. So price came down, and for 30 or so minutes, hour after that, we were range bound, chopping, no setups, and you know, we saw that in the equities that we trade, which I'm going to post up here now. So the equities that we trade, this is why we monitor the S&P 500, just because the equities we trade, we want to compare it. If the market's weak, is the market consolidating? Are we balanced? Are we choppy? So how are other things? So at the same time the S&P 500 came into demand, AMD bounced right off of a buy imbalance. Now this was not the strongest level, but we had confluence with AMD hitting a buy zone where market participants are looking to the long side, And we also had confluence with the market hitting demand with very strong buying. So if the market did want to bounce and AMD was relatively strong or trading in sync with the market, we were going to rally as well. So this was a very high probability trading setup. And then we rallied pretty hard and into supply. So look, as soon as we came into supply, look at the volume. If you watched my last volume analysis, it's a perfect example. We came up, we actually created somewhat of supply inside of supply, heavy volume, and we immediately sold off from the supply imbalance. So from demand right into supply. So now let's get back into the S&P 500 chart. And we rallied past above high a day. And this is the most important thing. So we're above $3,800. And if you know key levels, if you know psychological levels, 3,800 is obviously a strong level that a lot of participants are watching. So we get above, volume starts increasing, but here we break above high a day. And let's say you don't know supply and demand, you don't know where there's a sell imbalance at, you would look to take the market long because we break above a very important level. It looks like we're getting closer to breaking above this pre-market pivot, and you could take this long. But if you're in supply, that stops you from taking it long. And this right here is a common trap for retail traders. Long inside of supply above a major level, and they completely get dumped on, and the market aggressively sold off about 30 or so points from the supply imbalance, and it was a very nice trade. Now we had tested this demand again, these buyers gave up, but one thing I want to mention here is the volume that came in at the lows. So literally the low of day, if you look at a 5-minute chart, was the highest amount of volume today besides the last closing candle, which is obviously one of the most, including the first. So what this is telling me here is that buyers, especially that we are now outside of this range. So look at the bigger picture. Let's look at a 15-minute chart. Now that we're outside of this range, highlighted by these green marks, you have to understand who is getting rewarded, who is in trouble. So we came below, buyers are obviously in trouble. But buyers have to prove themselves. They have to get rewarded, or else they're going to be underwater and the market could sell off. So we're below the range, and we had something we call responsive buying, which essentially is that the market is coming down and you have buyers stepping in, creating value down here, and they bring price up because they don't want it to go lower. So they're responsive and they bring price up. Now this was at the same time as well that Microsoft, we had a buy imbalance up here, which we failed to hold. Every time we tested it, it seemed like we were going to bounce, but VWAP acted as resistance. So we eventually sold off at the same time the market sold off. So if I were to sync these charts, this drop right here would look exactly identical to the drop on the S&P. And we came down right into this buy imbalance. If I remove the rest of the demand zones, right into the buy imbalance and rallied about 2 or so points for a very decent setup. So that was that, and we rallied pretty much towards end of day, and these responsive buyers held going into the close. They did not make price go lower. So very interesting reaction. Pretty much in this market, every dip we've been seeing has been getting bought up. Apple, in the pre-market plan, we had supply at 1256. If sellers are present, we have room to go to demand at the zone around 127.50 to 126.15. So we opened up and we rallied right into supply, right according to plan. We rejected. Sellers were very responsive. They took us down. And then for the past 2 hours or so of market open, we were consolidating, but very bearish. We were wedging, so we were making lower highs. We were also making higher lows. So this was getting tighter and tighter. If you missed the first move from supply, we came up. This is where you have to be bearish, where you have to short all pops and short all rallies. If you got short on this move up, you could put your stop very small, about 60 or so cents. But we eventually did break this wedge and we sold off with the market. Again, that's why we watched the S&P 500, because this was at the same time. Came right into the 127.5 buy imbalance, but it didn't bounce. We had very strong buying. It did not bounce until we got to the 127 zone, where buying was confirming it, and we bounced along with the market. Did everybody know that the market was going to bounce the way it did? No, but we have to respect the imbalances, and we have to respect the market overall as a whole. Here we have Amazon. It broke below support. The doors were open to sell lower into the 3094 demand. I'm going to remain a bear as long as below 3140 to 3158. targeting 3094 demand and lower. So Amazon opened up and sellers were very responsive. We sold off. This sell-off was kind of on low volume. It was kind of choppy, but right according to the plan. I provide the plans. You have to stick with the plans. If you make your emotions get involved, you're going to deviate away, but a plan has to be set in stone. These are key levels on a chart. Some of them work, some of them don't work, but the probabilities of market reversals and market continuations are very high. So from the 3140 supply all the way down into the buy imbalance at 3094. Again, this was at the same time the S&P bounced, so it was confluent. So that was Amazon. Next thing is Netflix. Now this is a good lesson as well. So we had tons of demand. This is the first time we were testing this area for a while. Market sold off with no convincing signs of any type of buying. So when there's no signs of buying, it's kind of like a dead fish where we're just slowly moving down the stream with no signs of anything stopping us. There's no reason to try to catch the falling knife. The first time we tested demand, no signs of buying. Second time, you could argue that price started stalling out, volume was increasing, but there was just no movement to the upside. The candles were very thin, and it took us to get down until the 4864 or 486.4 area, and that's where we started to bounce, but this bounce wasn't very convincing. Everywhere in this 490 area was extreme chop. And then going back to that Amazon example, so if you did take this setup short at supply, these contracts the premiums are very expensive on Amazon. But they doubled from 21 bucks all the way to 46 on the option contracts on the 3100 puts. And then FedEx, same thing. I mean, we were chopping inside of this buy imbalance, but right according to plan, we have demand at 245 and then 238. Market opened up, sold off into this 245 demand. Was kind of choppy, but we were still uptrending. We were still making, somewhat of bullish momentum. I don't normally trade this name, but as soon as we broke out, this thing rallied and had a nice end of day move up. The point I'm trying to make here is that you have to stick with the plan. You have to create a plan, and you have to not deviate away from that. You have to understand market context, understand supply and demand, as it is what moves price in any single market, whether you trade large caps, small caps, mid caps, options. It's how price moves. It moves from imbalances to balances, and our imbalances create these zones where we look to take the trade and place high areas on a chart where the market could possibly turn. So I hope you all enjoyed this video. If you did, take a second to just smash that like button, and also make sure to follow me on Instagram. You're seriously missing out if you aren't. Subscribe to my channel, and I'll see you all at the next video. Peace.